All right, so you want to understand the real value of crypto, right? Not just the hype, all the fundamentals.
Exactly, beyond the buzzwords.
Yeah, and for this deep dive, we've got Thomas Jeager's book, Understanding Crypto Fundamentals. He really comes at it from this value investor perspective.
Yeah, a really solid foundation, and we'll be bringing in some extra insights to keep things current.
Perfect. So, our goal. We want to equip you to actually assess crypto's potential. The good, the bad, the risky.
The whole picture.
You should walk away from this able to hold your own in a crypto conversation, maybe make some smarter investment choices, or just impress people, at parties, dinner.
Sounds like a plan.
All right. So Jeegers, right off the bat, makes a strong case for decentralization, especially with, well, everything happening with banks lately. It's been kind of crazy.
Yeah.
He uses this analogy of like ecosystems, the more diverse they are, the tougher they are, right? They can handle shocks better.
Yeah, so if you think about it, our current financial system, it's like a monoculture. Super interconnected, so one thing goes wrong.
Domino effect. It's like
Exactly.
we saw with those bank failures, everyone freaks out at the same time.
Yeah.
So is Jeegers saying we need a multi-currency world to fare this? I mean, what would that even look like day to day?
He doesn't give us a step-by-step, but he does pinpoint some problems that crypto is already addressing. Things traditional finance just kind of struggles with.
Okay, give me an example.
Energy use. Everyone thinks Bitcoin mining just guzzles energy, right?
Yeah.
But Jeegers makes this case that it can actually encourage, like incentivize renewable energy.
Wait, really? How?
So miners, they want cheap energy, right?
Yeah.
Abundant energy. And often that means places with excess renewable energy.
Right.
So instead of that energy being wasted, it's being used to secure the Bitcoin network.
Interesting.
And because mining is decentralized, anyone can jump in. Makes energy production potentially more democratic.
So it's like Bitcoin miners become these customers for the renewable energy projects, helping them be more profitable.
Exactly.
That's a twist I hadn't considered.
It's a fascinating angle.
Yeah.
And then there's transparency. Blockchain, everything's recorded, auditable, right? No hidden fees, no shady stuff going on behind the scenes.
Yeah, sign me up for that. No more surprise bank fees.
Right. And another area where crypto could really shine is this, creating a truly fair sharing economy. Like, we've all heard about musicians getting, like, peanuts from streaming, right?
Yeah.
Blockchain cuts out the middleman, lets creators get paid directly.
So I could be listening to my favorite band knowing they're getting a fair cut.
Exactly. It's a game changer for creative industries.
Okay, so crypto has potential. We get it. But before we all run out and buy Bitcoin,
Good point.
Jeegers has this helpful way of sorting out the different types of crypto out there, right? You've got cryptocurrencies, you've got stable coins, even these central bank digital currencies, the CBDCs.
Yeah, and those distinctions are important because it gives you a clue about their purpose, their potential impact.
Okay.
Like cryptocurrencies, Bitcoin, they want to be decentralized, no government control. Stable coins, they're often pegged to, like the US dollar, they're kind of a bridge.
Between the two worlds.
Exactly. And then CBDCs, those are issued by central banks. They're digital, but
Not really the same spirit as crypto, are they?
not the way a lot of enthusiasts see it, no.
Okay. So then where do things like NFTs fit into this? DeFi projects, they're not really like currencies.
Good point.
Yeah.
That's where crypto commodities come in. These are the platforms where the smart contracts run. Ethereum, Solana,
Okay.
they're the foundation. That's where your NFTs live, your DeFi projects.
Yeah, makes sense. So that's where it all happens.
Yeah, and here's where it gets interesting from a regulatory perspective. Jeegers brings up this key question. Is this crypto asset a security?
Why does that matter?
Because that determines how they're regulated. And right now, the SEC is laser focused on making that distinction.
So for someone like me, just trying to invest, what does that mean?
Well, the SEC uses this thing called the Howey test to figure it out. It basically boils down to, is there an expectation of profit that depends on someone else's work?
So if I buy a token hoping it goes up because the team behind it is doing great things, that could be a security?
Exactly. And if it is classified as a security, then all these registration rules, regulations, they kick in.
Okay, so you really have to understand that landscape before you go investing.
Absolutely.
But honestly, I think what most people want to know is, how do I actually get started?
Fair enough.
Jeegers lays out a few options, starting with direct investment. You're buying and selling crypto on exchanges.
Right.
Seems like the most obvious way, but a bit scary for a beginner, no.
It can be, but there are resources out there to help.
What are the biggest risks, though?
Security is number one.
Yeah.
Got to choose a reputable exchange. Secure your wallet. And then there's the market itself, right? Crypto prices can be wild.
So, not for the faint of heart. What are the other options then if I'm not ready for all that?
There's indirect investment. You've got ETFs that track crypto prices or companies holding a lot of crypto, like MicroStrategy. You get exposure without managing your own wallet.
So, hands off, but still benefiting from the potential growth.
Right. And then there's the Wild West of initial coin offerings, the ICOs.
Ah, yes, the ICOs.
That's where you hear the get-rich-quick stories,
Yeah.
but also the lose-everything stories.
Yeah, that's tempting, but is there a safe way to approach ICOs?
That's debatable. They're high risk, high reward. You're betting on a project before it's even launched.
Okay, maybe not for me right now. What about these passive income opportunities? Staking, lending, liquidity mining?
Those are definitely worth looking into. Staking involves holding certain crypto to support the blockchain. You earn rewards, kind of like interest.
Interesting. Are there downsides?
Well, the crypto you're staking, its value can fluctuate. And some staking has lockup periods. You can't access your funds for a while.
Okay.
Lending is simpler. You lend your crypto, earn interest.
Like a crypto bank, basically.
Kind of, yeah. And then liquidity mining, that's a bit more complex.
That one always throws me off.
It involves providing crypto to decentralized exchanges, the DXs, so trading can happen smoothly. You get rewarded for that. But there's a risk called impermanent loss.
Uh-oh, what's that?
It's a bit tricky, but basically, the value of your crypto can change while it's being used in that liquidity pool. Let me give you an example. Okay, so imagine you've got 100 of token A and 100 of token B, each worth, say, $1.
All right.
You put them into this liquidity pool on a DX for the AB trading pair.
Okay, yeah.
Now, token A, it doubles in value, goes to $2. Token B stays at $1. Because of how these pools work, to keep things balanced, you might end up with, say, 70 of token A and 140 of token B.
Oh, I see. So the same total number of tokens, but the ratio's shifted.
Right. Now, if you just held onto your original tokens, you'd have $300, right?
Yeah.
But with this impermanent loss thing, you might only have like $280.
Ah, because of that shift in value.
Exactly. It's impermanent. Because if the prices go back to that original ratio, you withdraw your liquidity, poof, the loss is gone.
Okay.
But if you withdraw while the prices are still different, that's when it becomes permanent.
Gotcha. So it's a bet on whether those prices will, like, rebalance.
Yeah, essentially. It's a trade-off. You earn those rewards for providing liquidity, but you're exposed to this potential impermanent loss.
All right. Makes sense. So we've talked about actually investing in crypto, but Jigers goes into some fascinating historical examples, right? How crypto fits into the whole, like, evolution of money.
Oh, yeah, he goes way back, even before coins were a thing.
Really?
Talk about how societies just naturally, they kind of gravitated towards using stuff like gold, silver as money.
What made those things good money, though?
Well, good money, it has to have a few key traits, right? Durable, so it doesn't just crumble. Portable, easy to carry around.
Okay.
Divisible, you can break it down into smaller units. Fungible, every unit's the same as any other. And scarce, there's a limited supply.
Makes sense.
Gold and silver, they pick those boxes pretty well. They don't corrode easily. They're relatively easy to transport. You can melt them down, divide them up. Each ounce is the same as any other ounce. And they're not, like, infinitely abundant.
Right. It's not like you can just make more gold out of thin air.
Exactly.
So how does crypto stack up against all that?
Well, surprisingly well, actually, especially Bitcoin. It's digital, so portability, that's built in. Divisible, down to these tiny units called Satoshis.
Satoshis.
Each one's the same as any other, so fungible. And Bitcoin's supply, it's capped, 21 million coins.
So scarcity is there, too?
Yeah.
So in terms of those core money traits, Bitcoin's doing pretty good.
It is.
But Jigers also talks about when things went wrong, right?
He does. Points to times when governments tried to manipulate their currencies, and it usually didn't end well.
Like what? Give me an example.
The Roman Empire, classic example. They started messing with their coins, reducing the precious metal content, figured they could get away with it.
Sneaky.
But people caught on. Value of their currency tanked, inflation, economic instability, the whole 9 yards.
It's like you can't cheat the system forever.
Nope, it always catches up. And Jigers argues similar things happen throughout history, whether it's, the Weimar Republic hyperinflation or the U.S. going off the gold standard.
Right, those are big ones.
Yeah.
So how does crypto, Bitcoin specifically, fit into this whole historical picture?
Jigers sees it as a return to those sound money principles, the ones that have been abandoned over and over.
Okay.
With Bitcoin, governments can't just print more. Central banks can't manipulate it. That supply is fixed, written into the code.
Makes you think, huh?
It does.
What about all the other crypto assets, though? Do they fit this narrative too?
That's a good question. Jeegers mostly sticks to Bitcoin, but he acknowledges that, the crypto landscape is changing fast.
Always evolving.
He hints that other crypto assets might disrupt different parts of the system, like Ethereum, with smart contracts enabling DeFi, decentralized finance. It's a more open, transparent alternative to traditional finance.
DeFi, yeah, that's the hot topic these days. New projects popping up left and right.
So much innovation happening. But it's still early. Important to be aware of the risks.
Speaking of risks, Jeegers doesn't shy away from that, does he?
Nope, not at all.
Yeah.
He has a whole section on risk management, breaks it down into financial risks, non-financial risks.
Makes sense. What are the big financial ones he highlights?
Market risk, liquidity risk, those are the main ones. Market risk, that's just the risk that your investment loses value, prices go down.
Happens with any investment, really.
Exactly. Liquidity risk, that's the risk that you can't buy or sell something quickly enough. Not enough buyers or sellers out there.
Okay. Those seem pretty straightforward.
Yeah.
What about the non-financial risks, then? Those seem more crypto-specific.
Yeah, things like regulatory risk, right?
Yeah.
Governments could crack down on crypto, prices could plummet, even outright bans.
That's always a concern. Governments haven't always been crypto's biggest fan.
Nope. And then there's technological risk. Bugs in the code, hacks that could, compromise the whole network.
And of course the classic, losing your private keys.
Ah, yes. Key management risk. Big one. You lose those keys, you lose your crypto, no way to get it back.
Like losing the combination to your safe?
Exactly.
Yeah.
So yeah, managing risk, super important for anyone getting into crypto. What kind of practical advice does Jeegers give then?
Well, he really emphasizes doing your own research, understanding the technology, knowing the risks,
All the basics.
and crucially, only investing what you can afford to lose.
Golden rule.
But what about all the scams, the hacks we hear about? How can people protect themselves?
That's a huge issue, and Jeegers doesn't downplay it. He talks about choosing reputable exchanges, wallets, being wary of those phishing scams,
Right.
and being super skeptical of anything promising guaranteed returns, if it sounds too good to be true.
It probably is.
Exactly. Words to live by, especially in crypto.
So we've got the risk management basics down, but Jeegers also gets into the nitty-gritty of how to actually invest.
He does. He gives you step-by-step on setting up a wallet, picking an exchange, even gets into more advanced stuff like cold storage, hardware wallets.
Let's break that down a bit. What exactly is a crypto wallet and why is it so important?
It's basically software that lets you store, send, receive cryptocurrencies. Think of it like your crypto bank account.
Ah, okay.
It's where your crypto lives, so to speak.
So are there different types of wallets?
Jeegers talks about hot wallets and cold wallets. Hot wallets are connected to the internet, so they're more convenient for day-to-day transactions,
Right.
but they're also more vulnerable to hacks. Cold wallets are offline. They live on things like USB drives or these dedicated hardware wallets.
Oh, I've heard of those.
They're way more secure, but less convenient if you're trading frequently.
So it's that balance, security versus convenience.
Exactly. Jeegers recommends using a mix, depending on your needs and how much risk you're comfortable with.
Makes sense. And what about exchanges? How do you pick a good one?
He says, look for ones that are reputable, secure, got a good track record, offer a variety of cryptos, and have decent fees.
So do your research, find one you trust.
Absolutely. And he's big on securing your account. Strong passwords, two-factor authentication.
Can't be too careful.
Nope. And if your portfolio is growing, he suggests looking into even more advanced stuff, like multi-sig wallets where you need multiple keys to authorize a transaction. Or hardware wallets, those offer the highest level of security.
Wow. Okay, so we've got wallets, exchanges, security. But how does all that staking, lending, liquidity mining, how does that actually work in practice?
A lot of exchanges offer those services directly. You can stake, lend, provide liquidity right through their platform.
That's becoming more user-friendly.
It is. But Jeegers, he reminds us there are always risks, right? Understand the terms, the potential for loss, any lockup periods.
Got to read the fine print.
For sure. And he also mentions yield farming, which is more active. You're moving your crypto between different platforms to try and maximize your returns.
Yield farming, that sounds intense.
It can be. Lots of research, lots of monitoring, definitely not for beginners.
Okay, so we've got the whole range from just buying and holding to these more like hands-on strategies like yield farming.
Yeah, there's something for everyone, depending on your risk tolerance, what you're hoping to achieve.
But before we wrap up this part of our deep dive, I want to circle back to something we mentioned earlier, the potential like societal impact of crypto.
Okay,
Jagers just touches on it briefly, but it's been on my mind. If crypto really goes mainstream, how does it change the world?
big question. And Jeegers leaves it pretty open, for us to think about.
Right.
But he does suggest that crypto could create a fairer, more accessible financial system,
Okay.
empower individuals, give them more control over their own money, and just foster innovation, create new ways to create value and exchange it.
I'm kind of both excited and a little scared by the possibilities.
I feel you. It's a weird mix.
It is. It's like we're watching this tech revolution unfold, but we have no idea what the ending is going to be.
It's going to be interesting, that's for sure.
So where do we go from here? What are the key takeaways for people listening trying to make sense of all this?
Most important, stay informed. Keep learning. Keep asking questions. Don't just assume you know everything.
Don't blindly follow the hype, but don't dismiss it either.
Exactly. Approach crypto with a healthy dose of skepticism and curiosity.
Yeah.
Do your own research. And remember, there's no one right answer.
And of course, the golden rule.
Yeah.
Never invest more than you can afford to lose.
Absolutely crucial. This market, it's still very speculative. There are inherent risks.
Right. Well, I think we've done a pretty thorough job of unpacking this whole value of crypto assets thing, from the technical stuff to the like philosophical stuff.
Yeah, I think we covered it all.
It's complex, but definitely worth wrapping your head around.
For sure.
And on that note, big thanks to everyone for joining us on this deep dive into the world of crypto.
It's been great.
We encourage you to check out Jigger's book, Understanding Crypto Fundamentals, and just keep learning about this space.
Yeah, keep digging.
The future of finance is being written right now, and we all have a part to play in shaping it.
Couldn't have said it better myself.
Until next time, keep learning, keep exploring, and keep diving deep.
All right, so we're back for the final part of our crypto deep dive. We've covered the tech, the investment strategies, all the risks, but now I want to get into something a bit more, like, philosophical,
Okay, yeah, I'm intrigued.
So Jeegers, he touches on this idea that crypto is more than just tech, right? It's like a social movement, a push for change. What are your thoughts on that?
It's fascinating. I think at its heart, crypto is about like pushing back against centralized power, putting control back in the hands of individuals.
It's pretty radical when you really think about it.
It is, yeah. And it goes beyond just money, right? It's about control of our data, our identities, even like our futures.
So how could this actually reshape things? I mean, the world as we know it. Well, imagine, you don't need banks to hold your money. You can send value to anyone, anywhere, instantly. No permission needed.
That sounds pretty utopian, honestly.
It does, doesn't it?
Yeah.
But is it realistic? I mean, there are definitely challenges.
Like what?
Well, decentralization can be messy. Coordinating things, governing systems without someone in charge, that's tough.
Yeah.
And there's always the risk of, bad actors trying to game the system.
So it's not a perfect solution. Got it.
Yeah. But Jeeger seems to think the potential good outweighs those risks.
Yeah. And you?
I tend to agree, actually.
Mm.
Crypto could disrupt things in a really big way, create a more transparent world, fair, where power is more evenly distributed.
It's exciting, but also a little scary,
Oh, for sure, I feel that. It's like we're in this tech revolution, but no one knows how it ends.
So where do we go from here? What are the key takeaways for our listeners, people trying to make sense of all this?
Stay informed. That's the biggest thing. Keep learning, keep questioning. Don't just assume you've got it all figured out.
Don't just buy into the hype, but don't dismiss it either.
Exactly. Approach crypto with like a healthy dose of skepticism, but also curiosity.
Yeah.
Do your own research. There's no one right answer here.
And of course, that golden rule, don't invest what you can't afford to lose.
Absolutely. This is still a super speculative market, inherent risks, and all that.
Well, I think we did a pretty deep dive here, unpacked this whole value of crypto assets thing from all angles.
I think so too. It's a lot to take in, but it's worth the effort,
Yeah, for sure. Huge thanks to everyone for joining us on this crypto journey.
It's been a pleasure.
Definitely check out Jager's book, Understanding Crypto Fundamentals. Keep learning about this space because things are changing fast.
Absolutely. Keep exploring.
The future of finance is being written right now, and we all have a say in how that story goes.
Well said. Couldn't agree more.
So until next time, keep learning, keep exploring, and keep diving deep.